What's going on, everyone? We hope you had a great weekend. We have a lot set for this week's schedule in the market. As you guys know, last week there was a lot going on with the Middle East and the oil market, and it looks like this whole situation is not slowing down in any way. We are 1 day away from the 1-year anniversary of the October 7th massacre, and at the same time, Israel is doing their heaviest rate of bombing, you can say, which is only further escalating the conflict in the Middle East, which will have very important effects not only on the oil market, but also war and defense stocks, and even the price of gold and silver, and just the market as a whole. So there's a lot to cover there, but at the same time, we do have some pretty important updates related to the port strike situation, and we're also heading into the month of October, which is very statistically significant in general, but especially so in election years. So we have a lot to cover today. We're also going to cover some great charts and setups for the week, so make sure to stick with us all the way until the end. But besides that, Tom, let's jump right into it.
Yeah, the market was pretty boring last week, Mike. You know, going over to the SPY, looking from where it opened up on Monday to where it closed on Friday, it was pretty insignificant on the movement, but it's still pretty close to the all-time high, around that 575 mark. So that is definitely going to be on watch this week, but I think that there's going to be some pressure getting there as Israel is upping their escalation with these bombings, and also we have the anniversary of the October 7th massacre. Like you mentioned, that massacre was obviously pretty bloody, and Israel might do something on that day, obviously marking that 1 year mark. Also, I'm a little worried that there might be just violence in general, as the FBI is even putting warnings out there, you know, saying that like synagogues and mosques could be targeted. And also I read that they were looking at like maybe a big gathering groups and stuff like that could also be targeted. So, you know, just be a little wary over the next couple days of some of this, some of these escalating tensions, so to say.
Exactly. Like, this Middle East conflict situation is very important on so many different fronts, and especially the fronts relative to the stock market is the oil, oil stocks, the price of oil, and everything associated with that. As we know, the Middle East is a major oil-producing region of the world, and for those of you who don't know, Iran fired like over 200 ballistic missiles at Israel last week, and Israel said that they're going to pay a big price for that big mistake. And Israel is like really upping their intensity of the bombings and, you know, their entire operation, you could say, which only further worsens the situation in that region of the world. Either way, oil prices are on the radar for so many traders right now, as the price of crude oil, at least the futures at least, broke above $75 a barrel on Friday. Stocks like ExxonMobil, Chevron, maybe Oxy, OXY are all getting some nice bullish pressure right now, and we've been talking about this so much at least over the past week and a half. So continue to keep a very close eye on stocks like this, but even stocks like XOP, which we also talked about recently with that recent big money bullish play. This area of the market is getting a lot of attention right now, and if these conflicts continue to worsen, it will only help the bull case for oil.
Yeah, and I think a lot of these oil stocks here are getting pretty overextended in the short term, and a lot of people are pretty worried about like a lot of the upcoming resistances and stuff like that, like with Oxy, for example, which isn't making new highs. It was pretty wild, Mike. I went over to the ZOM daily chart, and I was like, whoa, ZOM made new all-time highs on Friday. That's pretty awesome. So, you know, they're up there in no man's land, but Oxy here is running up into a lot of resistance. Just keep in mind that with these events, there could be enough volume and momentum that these resistances just get blasted right through. I know a lot of people were pretty surprised that $55 didn't hold up as much as they thought it would on Oxy on Friday. And, you know, going forward, just watch some of these major levels coming up, because it could end up being an area where we do see a bit of a slowdown. But I would say, Mike, you know, with all the volume going on right now, I don't think that these stocks are overextended. I think that the breakout is just beginning. And if Israel does up the ante a little bit more, I mean, this could obviously pop off for weeks and months to come, obviously.
Yeah, so we'll definitely keep a close eye on oil stocks, but we also need to keep a close eye on gold, silver, and mining related companies, as when there is fear in the world, and let alone other things, it definitely pushes up the price of, I guess you could say, safe haven assets like gold and silver. Gold is just under $2,700 an ounce right now, and it's actually having one of its best years in decades. We could see the yellow line in the chart right now shows gold in 2024, and it's off to a great start. So ticker symbol GLD is worth watching very closely, as it does have a lot to gain from this situation and just the Fed's cutting rates. SLV is silver, which is also moving in a pretty positive and strong way. And there's even metals mining like related companies like GDX. So keep a close eye on these stocks going forward. They can also have a lot to gain, and they are already having a pretty great year.
Yeah, they really are. Some of the mining stocks like GDX have been pretty crazy. I will say, though, GLD is doing GLD things right now, right? It's not really like a stock that you're going to generally see have huge breakouts. Now, I know that over the past couple weeks, we've been graced with some great movement by GLD, but, over the past few days, it's just been kind of consolidating there. And I think that it's kind of waiting for some of these escalations to pop off a little bit more. And whenever that happens, I think that we could see gold obviously get back towards those highs. And, I know a lot of people are like, wow, Tom, gold's seriously overextended. If you think that, maybe watch silver. Silver's right at a key resistance, and it's trying to really get above this $29.50 to $30 resistance. On Friday, it really tried, and I'm going to be watching this $30 area very, very closely with silver while this whole situation goes on. And I just don't want people to forget about the metals either, Mike, because I know oil is obviously taking the spotlight away right now. But, gold and silver, they are a little bit slower moving, but that makes them more consistent and easier to hold for a longer period of time.
Absolutely. So like you said, let's keep a close eye on these stocks. But another thing that we have to be aware of is that we are heading into a time of the year where the market just kind of sucks, to be honest, and especially in election years. So we could see that the market is off to one of its strongest, starts, or I don't even want to say starts of the year. It's in one of its strongest years, like, ever. And with that being said, the month of October specifically ended up being a downfall for other historical times when the market was moving in a strong way. We could see in 1954, 1955, 1975, 1983, and these other examples that were just strong, extremely bullish years for the market. October did end up being like a cooling period, and this is like almost like especially so in election years, as we've showcased multiple times over these past couple of months, where October ends up being the worst month of the year on average during elections. So, considering it's only October 6th right now, just be a little bit wary. October normally isn't all that strong.
Yeah, it definitely isn't, Mike. And, this chart is very interesting because not only are we in an election year and the worst month with that, but whenever the market does this well, October is one of those months where we do see a cooling period. And I thought it was interesting going back to the entire year, looking at the Q4 returns, the rest of the year is actually pretty good. So, we might see a dip in October, but maybe November, December, as we start to see the holidays roll around, we might start to see a bit more of an uptick again. I will say the average move for the Q4 return definitely gets skewed by 1987. That would look a lot better if some of the numbers from that year were just slightly better. But yeah, even with that though, most of the other years were pretty good there for the end of the year. So we don't want to sit here and maybe make you think like, oh my gosh, the markets are going to crash for a year now. No, that's really not the case. Just be careful throughout this month. And of course, there's a lot of stuff to back this up in the short term as well, with the whole Israel situation, then even the economy as well.
Absolutely. And I will add that there is some half good news, if that helps, that the port strike has ended temporarily. We could see that, they came to a short-term agreement, but at the same time, it started a brand new 100-day countdown to a new strike. So basically, the dock workers they agreed on their wage increase part of the deal, but they still have a lot of problems with the automation that is going on with these ports. So we're going to see if we have a big problem in 100 days from now, but this can got kicked down the road. But I guess it's good at least for the short term.
Yeah, it definitely is. And I was really surprised to see this, Mike. I thought the strikes were done. And then out of nowhere, I start hearing stuff where a lot of the workers are upset about like automation and using robots. And obviously that'll cause them to lose some jobs and etc. And they're even saying like, that semi-automation in the short term will lead to automation down the line. And I thought it was interesting. There was even a quote where someone said, "It doesn't matter if they pay us $100 an hour. We will not have jobs in the future." So I don't know. It seems like they're pretty serious about this, Mike. So we'll have to see if there's a second strike or not. And I think if there's a second one, that would be pretty bad heading into like the whole holiday season and, with the Black Friday shopping and everything like that going on. It could end up being a pretty big deal, of course, if this ends up happening for all of the reasons that we talked about before, right, Mike? Obviously I kind of expected that other strike to last a little bit longer, but it ended up ending pretty quickly. Hopefully they can get this resolved before a strike happens.
Yep, so we shall see. But on a more short-term sense, we do have some pretty important events for this week as we have some FOMC minutes report set to release on Wednesday at 2 p.m. Eastern Time. This will add a little bit of extra volatility into the markets, but I would say even more importantly, we have inflation data set to release on Thursday, 1 hour before the market opens. This data has been some of the most important data over the past couple of years. Inflation has been coming down, which is great to see, but if we do see signs of it ticking up, that can present a major risk to Jerome Powell's soft landing. Towards the end of the week, we have some PPI data and consumer sentiment, but that is it on the economic schedule. And Tom, we do have a handful of somewhat exciting earnings for the week.
Yeah, we do. We always like to say the bank stocks are kicking off earnings season, and it looks like this Friday we're seeing the big banks report again. JP Morgan, Wells Fargo, BlackRock on Friday. On Thursday, we're going to have Tilray and Delta Airlines report. Then on Wednesday, we have Helen of Troy, and Tuesday, we have Pepsi. So fairly big week, especially towards the end with those big banks. JP Morgan, Wells Fargo, BlackRock, those are no jokes there.
Yep, no doubt. And then, of course, looking at SPY, we are very, very close to all-time highs. Tom, what do you have for us in terms of important levels and analysis for the week?
Yeah, so I would say watch the 573 resistance from Friday. SPY had a lot of problems really holding above there. There were a couple extensions on the candlestick slightly above 573, but for the most part, it stayed under there. So watch that. Watch 574, then 575. The all-time high is right around that 575 mark, so if SPY could break that, it would be awesome for next week. As far as supports go, keep your eyes on that 570 area along with 568, 566.70, and then 566 to the downside there. That's really what I'm watching this week for the SPY. If we do end up breaking below like that 566, 565 support, that would be a pretty bearish sign in the short term, but it's been very choppy around these levels, so keep that in mind for this week as well.
Realistically, I think SPY is not the best thing to trade right now. I think there's so much more like strong, consistent, powerful price action in other more specific areas of the market. Of course, we have oil moving in a strong way right now, but we also saw like Chinese stocks go crazy over the past couple of weeks, and even other areas of the market that have specific news. It's not really worth trying to fight the choppiness that SPY has in the current moment. If its momentum develops more, that can be a different story, but it's hard to fight chop.
Yeah, it really is. And last week, I think a lot of people were obviously buying a lot off of that 566, 565 support area. And there are some ways to play chop. Like if you're going to be buying off the lower end of the range, you can definitely try to do those types of setups, but you don't really get like that good directional movement that, you love to see whenever you're trading options and, you see those really big gains come in. But last week, the oil stocks were great, and there were definitely a few sectors that were popping off. We're going to have some great plays coming up in just a couple minutes as well.
Well, let's get right to it then. So with my first setup, I'm looking at ExxonMobil, and it is to the upside. We talked about this stock so much last week, and like Tom said earlier in this video, it's actually at all-time highs right now, which is great to see. ExxonMobil is still on my bullish radar. There's a lot going on in the Middle East right now. Oil prices are popping, and the stock is just moving in a great, with just great price action. ExxonMobil is on my bullish radar. At the same time, I wouldn't be like crazy surprised if we did see like a little bit of a pullback, but I'm really liking this price action.
Yeah, it's awesome. Whenever you have a catalyst like this, there can be some pretty insane runs in the short term. With my first stock, I'm looking at AMD, and AMD also extended up very well on Friday of last week, up above that 170 area, which was great. Now, there is some resistance coming up around 172, and I'm going to go to the Bookmap here for this one because 172 was a pretty big area last week once you got past that 170 mark. If we really see a good move past 172 this week, I'm going to look for a move higher up into that 175 range. You can see how there was a much bigger sell wall stacked up at 175 with about 100,000 shares stacked up there. So if we do see that 172 break at one point this week, I'll be looking for that move higher up towards that 175 mark. We did see some good movement out of tech towards the end of last week. So if that carries over into Monday, I think that's where the real opportunity is here with AMD.
Beautiful. And like you said, there's a major sell wall right at 175. So let's keep that close in mind. Another stock that I'm watching pretty closely is Celsius. Everyone knows Celsius energy drinks. This stock is down 70% from its highs that it made back in March, right around that $100 mark. And right now it's currently at like $30 a share. This one has been taken to the woodshed, to put it politely. Now, with that being said, the stock is a little bit oversold, and it's showing some early signs of, I guess you could say, shifting its momentum. The intraday price action is starting to shift a little bit more to the bull side, so Celsius is on my radar for like a dip buy style setup, but at the same time, understand that we can be a little bit early to this trade. Looking at Celsius, I like some of the bullish price action that it showed on Friday, but it wasn't strong enough to have like a truly explosive green day. Celsius is on my bullish radar going forward. Understand that it would be smart to wait for a confirmation of bullish momentum first. I think like one of the earliest signs, or one of the earliest signs we could see something like that would be if we see a break of like $30.75 per share, maybe 31. It depends how much wiggle room you want to give it.
Yeah, I really do like that area in the short term is a pretty decent resistance, and it does seem like a little base is forming in the short term there. I'll keep it on the radar. With my next play, I'm looking at Shopify. Shopify had a great move on Friday, up 5.49%, broke above that $81 resistance from last week as well. So this is going to be a straight up momentum continuation style trade. If we see another good breakout of like 82.80 come Monday morning, I'll keep watching this one to the upside, and we really want to see that good price action come in like what came in for most of the day on Friday. Around open, it was a little bit shaky, but for the most part of the afternoon, it had some very, very good momentum. And if we go to the daily chart with Shopify, it's still fairly low in the grand scheme of things. It's towards recent highs, but I really did like that breakout of that range from Friday.
Sounds good. All right, well, with that being said, Tom, let's jump right into the momentum plays for tomorrow. And with the first one, we have SoFi to the upside.
SoFi has been having some pretty good movement in the short term. They were up 7% Friday. If they end up breaking above $8.40, keep watching this one to the upside.
All right, with the next one, we have JD also to the upside.
Yeah, China stock here. JD's actually right at resistance from last week, so if they're able to break above that resistance right around $48, then watch them up, and if they gap up in pre-market, whenever the market opens, just make sure that momentum's there.
All right, and now with the last one, we have Coinbase for both directions.
Yeah, Coin can get pretty wild too. I was looking at Coinbase's options from Friday, Mike, and these are the ones that expire on October 11th, which is this upcoming week. A lot of them were up 50% plus, and this stock moves quite well. Its average percent rise is 3.26%. If it's able to break that double top from Friday around 171, watch this one to the upside. If it ends up breaking back under 167, then watch it back down.
All right, so we have the downside level for a potential move lower. We have the upside level for a potential move higher for Coinbase. Don't forget about the upside levels with JD and SoFi as well. But either way, these three stocks are on watch for potential day trades tomorrow, if and only if they break through the levels Tom listed. So keep them on watch. And Tom, let's jump right into today's $800,000 big money trade. And we are looking at ticker symbol VYGR. So I'm sure this is a company that not too many people have heard about. It's called Voyager Therapeutics. And on Friday, the big money put $800,000 into the 5-strike call options that expire on November 15th of 2024. This is a pretty interesting setup as the stock was up over 17.5% on Friday. Just for my advanced traders out there, technically this was a call debit spread where they also shorted the 10-strike call option, so keep that in mind. But continuing on, this is a biotechnology company. It's showing a lot of strength. It's very volatile. With that being said, stocks like this move a lot based off of like FDA drug approvals, outlooks, and anything else related to the treatments and products that this companies like this have. I really like the reward to risk here, but at the same time, it's worth understanding that any biotechnology stocks are volatile and they're crazy. And if you decide to follow it, you have to give it the time it needs. These options have until November 15th.
Yeah, it does have quite a bit of time, and I would say one thing I really do like is that it's starting to bounce really well off of this support, and it's starting to come up in a really good way. And a lot of times whenever you see this stock start to uptrend like this, the uptrend can continue for quite a long time, at least for a couple weeks. So I think there's still a lot of momentum left in the tank on VYGR. Some good targets in the short term might be like right around that $7.40 mark as an upcoming resistance. And then after that, I'll be looking maybe more around that $7.80 to $8 area past there. But it would be huge, Mike, to see this one just continue up for a couple weeks off of that good momentum. And, a 17% move like that is definitely no joke. I'm surprised to see the big money entering on a move like that.
Yeah, and I think it goes to show a lot. Like when you have a 17.5% up move, it is a very bold move, right? At the same time, stocks like this one are as volatile as they get almost, because biotechnology stocks have that crazy explosiveness to them in both directions, which is what oftentimes brings a lot of excitement and, just like crazy moves to these stocks. With that being said, these options have until November 15th. So it's going to be important to give them the time they need. But at the same time, it's going to be very exciting to see how this stock moves. Because as you pointed out, like let's say on some of these longer term charts, when this stock has moved in the past, it has, tended to move in a pretty strong way in both directions. We could see periods when this stock uptrends, it tends to last for like weeks to months at a time on multiple occasions, but it also works the same in the opposite direction. When this stock is downtrending, it's brutal and it lasts for weeks. So let's keep a close eye on this stock going forward. I think it's going to be an exciting big money trade to watch. But Tom, we also have to give a giant shout out to today's member of the day, which is the Detail Buff in the StockedUp Discord. They've been in the community for some time now, and they hit it out of the park on Friday with some mining related companies. So especially the crypto related mining companies. So huge shout out to you, Detail Buff. Great screenshot here. And hopefully we see many, many more screenshots like this one from you in the future. But if you guys are new to the channel, consider obliterating the subscribe button to get our videos recommended to you more often. We post brand new videos all the time and cover everything you have to know about the market, whether it be important events, world news, geopolitical outbreaks, big money trades, SPY levels and analysis, and much, much more. So when you subscribe, you'll get our videos recommended to you more often. Besides that, thank you all so much for watching, and let's have an amazing week in the market.